All right, we will get ourselves started. People still joining, but we'll get cracking. So thank you very much for joining us this week, everybody. It's great to have you here once again. Webinar 5, as I said. Big thank you, obviously, to our corporate partners and our partners who continue to support us as we move with this. Again, just a little bit of context. 18th of March, we were due to be hosting our first ARC360 event of 2020. Clearly things moved rapidly in terms of this pandemic, and subsequently the event, physical event, had to be pulled, and we quickly turned to webinars. So this is our 5th week in hosting. We run these every Wednesday, 1:30 till 2:30, and we're just trying to capture and glean insights from all corners of the industry as we go, and feedback thus far has been fantastic. And again, big thank you to everybody for joining us and contributing. So just before we get going, as everyone is aware who's joined us before, I do like to have a little bit of a disclaimer. Again, very, very aware that the situation here is moving rapidly and things are changing all the time. And I'm just very conscious that anyone who appears on the webinar would like to provide them with a little bit of protection. So again, you can see it on the screen, but I'll read it out for those who have dialed in. Views and opinions expressed during the following webinar are those of the individual contributor and do not necessarily reflect the official policy or position of the contributor's employer, organisation, committee, or other group or individual. And again, a little side note there, please respect all contributions, and we encourage you to join the conversation via the interactive functions available. Just to give us a little bit of a summary in terms of where we are. So I've already kind of spoken to the panelists in terms of last week's webinar, if they unfortunately couldn't join us. But most of you last week who joined us will have seen that Trend Tracker, we partnered with Trend Tracker and the MBRA to produce a body shop report, insight report. It was the last week in March, so we're a couple of weeks on now. Things have obviously changed significantly, I would imagine. But the snapshot was nearly 50% of body shops were temporarily closed. Again, there's been a couple of milestones along the way. Last weekend, pre-Easter, was kind of considered to be perhaps a cut-off point for some as well. So we'll perhaps find out a little bit more from the panelists today in terms of if that was the case. And these are just some real key highlights. The biggest problem initially during all of this was the availability of OEM parts. Subsequent to that, again, kind of lots of people have been rushing around and trying to put in certain measures and make availability a little bit better, which I think last week we kind of acknowledged. And the confidence factor, what are we at? We were at nearly sort of 80% confident in terms of they could weather the storm for a further 2 months. And again, sort of a 20% not confident at all. And MBRA also presented this last week. It was their kind of body shop calculator, just to give everybody a little bit of an insight. This was based on some real numbers from an average body shop, if there is such a thing. Chris Weeks talked our way through it. But in essence, what it highlighted was that kind of net profits at the moment per month were sort of somewhat £15,000 down, i.e. each job short of sort of £300–350 there. So that was a tool, and again, Chris Weeks of the MBRA is more than happy to share that, I'm sure, with everybody. So we welcome our panelists. So what I'll do is, in the usual fashion, again, just like to work our way around each of the individuals here today, a little bit of an introduction. I'm sure there's some familiar faces there for some people, but again, if we can just give a little bit of an introduction, your life, your job, your working world pre-pandemic, and then a little bit of a kind of, you know, week by week update in terms of what that world looks like right now. So I'll come to Andy Warren first. Hi, Andy.
Hi, Mark. Thanks. And hi, everybody. Hope you're all safe and well in these strange times. Looking at the, this is my first ARC webinar. So thanks for the invite, Mark. Seeing the names pop up on the chat, it was just like running through my phone. I think 90% of it, I know you, or you've had the pleasure of working with me or negotiating with me over the years. So for those who don't know, the 10%, up until a couple of years ago, I looked after the claims and supply chain for RSA Insurance. Left a couple of years ago to take it a bit easier and actually been working a lot harder. But mainly in the claims arena in the UK and the USA, not just on motor, a lot in pet, home, telematics, aviation, and commercial. More recently, I've been working with the founders of Ticker, which is the young driver insurance specialist, owned by Richard King, who probably a lot of you know, who founded the Innovation Group, and Gary Lineker, who's the face of the brand, and Aid Brown, who's my boss at RSA Insurance. Currently, though, I'm helping Atlanta Group, who are Swinton, Autonet, Carol Nash, some of the brands you'll probably know or you see on aggregators we then work for, with their claims operations. As they buy more and more companies, there's more and more claims work to do. So I'm proud to be working with those guys as well. I've also worked with Outertext the last couple of years on their visual identity product, the artificial intelligence damage assessment, which I guess is going to be estimatics going forward. So that sort of day to day now, since the pandemic, I mean, it's kind of more of the same, even though our claims are massively down, from shoring things up to when this comes to an end, and it will obviously come to an end, making sure that we're nimble and ready. And probably, I think most of the heavy lifting is the kind of contractual side of the business, as all of the suppliers' landscapes have changed, inundated with requests for help, for more information, that kind of stuff. So there's a lot of firefighting and heavy lifting going on at the moment, Mark.
Great stuff. Thank you, Andy. And Alex, over to you.
Good afternoon, everyone. I'll add to Andy just to say I hope everyone is safe and well. And if I do know you, you might not recognise me. My normal working day starts with a shave, but at the moment I've decided to give myself a holiday on that front. So I'm the supply chain director for Aviva in GI claims. I've been with Aviva since 1995. Some of that time in central procurement, buying sort of goods and services that the business needs to run. And then in 2007, I joined claims. I ran the ELPL Claims Centre in Glasgow for 3 years. I then joined supply chain, so getting back to the procurement side of things. I was head of motor claims supply chain. I then went in to be managing director of Solus, so Aviva's owned accident repair group. And actually, I'm still managing director of that business today, but I'm also, I've got my supply chain director role back again. So I'm currently looking after supply chain director in Aviva. We have a team of people who do the upstream procurement activity and a team of people who do the downstream service sourcing and service management. I'm also accountable for the oversight of all of that activity. And it's obviously not just motor, so it's across the GI gamut. So it's motor, property, casualty, travel, etc. And I was a member of the claims senior leadership team in Aviva. So I've also got cabinet responsibility for some of the broader claims decisions that are made in Aviva. I guess a typical day for me before is just like everybody else's, an office day, a busy day, meetings, travel, all the things we do. Since COVID kicked in, 2 weeks of pretty unprecedented activity, really. I guess you go very, very quickly. We saw it, everybody watches the news, everybody reads, the papers. So you start to see this thing is coming. So we started to think about it and plan for it. So the minute it struck, we had already been talking to partners about what could things look like in a lockdown scenario. So we went very quickly into what's really happening, watching changes in volume, really making decisions as quickly and as sensibly as you can. You're managing risk on a day-to-day basis and you're managing it across a wide and varied. Quite interesting for me because I'm able to see where I sit, the differences in the different markets. I was able to watch what was happening in motor, what was happening in property, both networks, both customer repairs. So a really interesting period, really active, really busy. So yeah, moving into now, and we'll probably get into that as we continue the conversation. Thanks, Mark.
No problem. Thank you, Alex. And Andrew, over to you.
Once again, thank you, Mark, for the invitation today. Really looking forward to it, and thanks everyone for joining again. I hope you're all well and managing to stay sane and safe. So I'm Andrew Brown-Allen. I'm the CMO of Track Global Group and Carrot Insurance, one of our subsidiary companies. We are a telematics business, and we work with insurers and mobility fleet operators, so data rental companies, for example, car clubs, on a global basis. And they use our technology to underpin usage-based insurance models, or if you like, for mobility fleet management purposes. We're quite unique in that we are a TSP, a telematic solutions provider that also operates a direct-to-consumer business. So we're seeing some really interesting, driver behavioural traits, if you like, and how they've changed over the past few weeks. And we get that benefit as a function of having that direct-to-consumer business. But we're also talking on a daily basis with some very big global insurers and mobility operators about how this is affecting them and what the future might look like. And I suppose if I come to the point around what does a day job look like, not only am I responsible for marketing our businesses, but I'm also responsible for working with our customers to help them build compelling propositions and use cases around our core technology suite. And I think what we are starting to observe is that insurers particularly are starting to realize and bring forward some of their approaches to how they create products that are better suited and more flexible to the way that mobility has already started to change, and I think will change consequently as a result of what's happened in COVID. One of the advantages, of course, of the kind of technology that we underpin our solutions with is that it's capable of not only detecting when an accident's taking place, but providing a really rich data stream around the circumstances of a claim, and working with our customers to help them get the benefit of that data so they can settle claims more efficiently, more quickly, is really at the heart of what we do. And it's absolutely certain from the inbound demand that we're seeing that insurers are now looking more to solutions that enable them to be better connected with their customers in whatever form that takes. So, prior, I've explained my day job prior. I think what we found certainly in the first couple of weeks of this starting to happen was, as an executive team, we were focused on transforming our own business, working from home, clearly, as most other businesses have had to contend with. But since then, I suppose, and it felt like a real change last week, people are now looking at what happens on the other side. And pretty much all of my day at the minute is taken up in conversations that involve thinking about what that might be for us and for our customers.
Okay, great stuff. And I think, again, from our conversations as the week's gone on, we kind of, we talked about where we were heading. And we talked about, the decrease in claims notifications that were going through. You guys have obviously got some sort of good data to back that up in a second. And I think you're absolutely right. Now we seem to be a gradual transition across to, what's it going to look like when we come out of this? And are we, also at that kind of, lowest plateau at the moment? Andy, what's your thoughts on that? Kind of, are we at that place right now? Have we fallen as far as we're going to fall, if you like?
I'd like to say I hope so. Mark, speaking to some of my my repairer friends and the replacement car buddies that I've got in the industry, you feel for everybody. From vehicle manufacturers right down to the smallest of sort of 5 and 10 man repair organisations. Having, I suppose, dug a little deeper into it, actually I don't think so. I think people have become, over the last 2 or 3 weeks, really. Now, I think pretty much been touched or know someone rather than know someone who knows someone that's had this awful virus. It's getting kind of closer and closer to home. So I think people are genuinely being more careful. The friends that I've got with kind of younger kids, the kind of kids that would be popping out on their bikes now, are just stopping them doing it because they've seen these kind of kids get together, and they may get the virus and not show any symptoms, but then they'll pass it on to their mums and dads who think they've got no reason to get it because Johnny just went out by himself on his bike where he drank out the same bottle of Coke as Freddie, and he picked it up, passed it on to them. They think they're virus free, and then they're passing it on to older or other people, more vulnerable people. So I think people are very sort of cognizant now that this is an absolute pandemic. They've been a bit more careful. So I don't think we're going to see a big drop, but I still think you know, mindful that the hospital admissions and unfortunately the horrendous death count is normally sort of 3 weeks away from where we are. So they reckon this week we're going to see the peak. So I think we've probably got another couple of weeks of pain before we see a decent turnaround and see a big drop in hospital admissions, that kind of thing. I mean, that's, I guess, an educated guess, but that's all everybody's, there's no rule book on this, Mark. Everyone is just kind of working on that. So in terms of, you know, the ears listening, or the people watching, so repairers want to, you know, we'll be full in 2 or 3 weeks, of course not. And I think it's going to be a slow return as well. People are just, as we were saying pre the call, Mark, are you all going to feel comfortable on day one when the restaurants are open, just running into a restaurant and hoping that nobody in the kitchen sneezed on your food? It's really impacted our mindset as consumers, as business owners, as parents, as, you know, husbands and wives. I think there's such a massive change that's going to come about with this. I still think it's going to get back to normal, what we consider sort of normal, but I think it's just going to take slightly longer than everybody thinks, because everyone's kind of thinking in the now and the immediate pain that's kind of coming in. So, yeah, I mean, long to a short question, we've got another couple of weeks kind of horrible, and then I think we're going to start seeing a sort of slower release. But, you know, maybe a good time to applaud a lot of the body shops who've literally just stayed open to keep people moving, and the daily rental boys as well, and some of the tech partners who've literally a risk. Okay, they're not the NHS, but they're still taking considerable risk, their own considerable risk to, you know, to keep literally the wheels turning. So, you know.
Yeah, absolutely. And Alex, in terms of then kind of, you know, claims notifications and what we're currently seeing in the market, you know, we were looking at kind of an 80% reduction from the survey, kind of indicated that. Is that a fair reflection from where you sit as well, your insight?
Yeah, I think currently it's there or thereabouts. I mean, we watched it drop pretty rapidly, didn't we, over the last couple of weeks? And really about 2 weeks ago, it dropped over the course of about a week. I mean, when you talked about, so sitting at 80%, let's say, whether it's 75, whether it's 80, whether it's 85, it's in that ballpark. It does make it incredibly difficult. And I do want to reiterate what Andy said. There is a big thank you. It's been a really tough time for businesses to make some really tough decisions about their people and how they maintain service to customers, putting their people at risk when they do it, and actually trying to maintain a financial balance that works. So a really big thank you to everybody who's supporting all of the emergency services, plus all our customers and our businesses. It's a phenomenal effort. Do I think that that's plateaued? Do you know what? At the moment, it feels reasonably calm, Mark. It feels like, you know, will there be fluctuations, and could it be regional, for example, to Andy's point about the way that the disease will drive behaviour? Yeah, it probably could fluctuate. I do think it depends what time you measure this over. So if you measure it in terms of this lockdown, is it going to get significantly worse than it is now? There's nothing to suggest to me that we would see it get any worse from a volume perspective than it is now. Like I say, a bit of fluctuation. However, I guess where my head turns is once the government release lockdown and people go out and behave in different ways, again, to Andy's point, as a build, it's whether or not we then end up in a second lockdown. So what happens if people go out, if the virus then, you know, makes a resurge going into winter, and all of a sudden we end up in the same problem with NHS, and suddenly there's people talking about, do we need to even put regional controls in place? Mm-hmm. So I think it depends on your timeline about how bad or good this gets and what the kind of ramping up of volume looks like. I don't think we can bank on a lockdown resulting in a linear build of volume. I think there could be some things that could disrupt that.
Okay, great stuff. Thank you, Alex. And Andrew, you kind of briefly mentioned earlier that you've already seen some very interesting data relating to kind of the demographics that use telemedicine.
Yeah, that's right. I mean, yeah, similar to the business that Andy's involved with in Ticker, you know, we, through our Carrot business, have been involved in young driver insurance for, well, what we launched Carrot in 2012, so some 8 years plus now. We've absolutely seen a change in behaviour, as in utilisation. Certainly, if I look at the past 3 weeks, and I look at the government chart that they share around the transport network figures day on day, the pattern that they show of how people's road use has declined and fluctuated is almost mirrored exactly by our own. But I think what it's fair to say is, given that we insure a book of relatively young and inexperienced drivers, you know, the assumption from us middle-aged folk might be that it's all of the kids that are out driving, still seeing their mates. I can say unequivocally that that's not the case. You know, we've got 56% of our insured cohort simply not using their cars at all. And those that are, the balance that are using their cars are doing so to make very short and infrequent journeys, certainly not on a daily basis. You know, average miles per day per customer has gone from 14 to 4. And this is, bearing in mind, this is the point of a better expression, this is the crashiest group of drivers on our roads, the people that contribute historically to the highest frequency and highest severity collisions. But it appears that the nation of young drivers is towing the line and doing the sensible thing. I can only quote anecdotally, though, from my case study of one, which is my 17-year-old son who passed his test 2 weeks before the lockdown. You know, his take on it is he's got a declared mileage policy that, like most policies are, and certainly telematics policies are, and his view was that he's using up less of his miles now, so he'll be able to drive more once the lockdown is lifted. Now, clearly, I'll try and play my part as a parent in mitigating that might point to the fact that there is a pent-up sort of feeling that people want to get back out in their cars, want to get back on the road, want to go and see friends, and might we see inadvertently might we see a spike following, you know, measures being lifted. All of these things are so unpredictable. You know, people are talking about overall post-COVID, people's car use, people's annual mileage will decline because they're going to be working from home more. But to sort of cross-reference the kind of point Andy was making about, will we go back to the Indian restaurant? How many of us that normally use public transport for work and get on a packed train in the morning, specifically going into London, how many of us will want to do that for the foreseeable future? Will we instead get back in our cars and drive to work? So there are so many things to counter every argument you can think of. But what's for certain is at the moment, insurers, I think, are unquestionably seeing a much lower exposure, a much lower claims frequency. Look at our new claims reported in Carrot. You know, the ballpark figure you've talked about, 80%, we can certainly see that number almost exactly ourselves. But as to what, you know, the new normal looks like post-COVID and post some of the measures being lifted, it's really not possible to know because there are so many human behavioral things that we can't ever begin to understand because we've never lived through this before. So it's entirely unpredictable.
Okay, thanks, Andrew. Andy, back to you. In terms of, so from a kind of overriding business perspective, I suppose, you see the industry from many different angles. And again, last week we specifically focused on sort of the vantage point from a body shop view and how the industry was evolving around them. How do you see it from where you sit with kind of, again, you know, with your sight of the industry, what kind of issues, challenges, opportunities even, you know, do you see as we kind of, again, continue to navigate our way through this? Or is it just at the moment all hands on deck and let's not even think about, you know, more than a few months away or weeks even?
I think well, after reading, it was refreshing to read Trend Tracker, or it was uplifting to read the Trend Tracker, which I only downloaded yesterday, so it was a lot to sort of take in, but I burnt the midnight oil and thumbed through it. And as I said before, the call, Mark, I mean, I'll probably see the right hand, the webinar chat go mad now, but repairers are a resilient bunch. I mean, I've given them a tough time over the years, and I'm sure Alex has and Andrew has as well, as has all the supply chain, but it's a tough industry to decide to make your living in. Margins have been tight. It's, you know, you're managed across all areas of the business. Certainly with my insurance hat on, or my insurance broker hat on, or work provider hat on, you know, financial, quality, speed, the whole kind of piece. So I think, you know, repairers are pretty tough. So, you know, they're not rolling over easily as a breed. And, you know, and the numbers that have said, you know, the chuck in the hat numbers were very, very small. I mean, largely because you can't afford to. But you know, as a word of encouragement to the the guys on the webinar, you know, we need you. So it is coming back. And I think to echo what Andrew said, if you cast your mind back to the horrible 9/11 scenario, nobody flew. And this, okay, it's not just about planes, but it's close quarters. I certainly wouldn't feel comfortable getting on a plane now. In fact, I've cancelled my several holidays this year if they've not been cancelled for me. So more people are kind of going to go on the road. So there's a good chance we might see a bit of a spike. There's it's no coincidence that UK cottages.com bookings are up by 198%. That's because people aren't going to the Costa or anything this year or early next year. They're all going to the Cotswolds or to the Highlands or the islands. So I think the kind of psyche that this is bringing out in the, not much the short term, but the medium term when the lockdown ends, people still want to go on holiday, and cash might be tighter for 78-80% of the UK, but people will still travel. I think just less so by aircraft. I think that's an industry that's going to be massively impacted, probably even more than our own. I mean, obviously the sort of downstream market has been thrown into disarray with parts suppliers just shutting down, or vehicle manufacturers. But the conversations that I've had, I've got less claims to manage, markedly less claims to manage, but people are still ready to do business. And I think certainly all the repairers that I've spoken to on day one will be ready at a distance to come in and do business. So I don't think it's going to be, I think it's going to be tough, and there will be some fallout, no question. I think that the kind of shame of it is that, we keep going on about investment in the business, guys are getting on a bit, and we all need replacing, and the same's in the body shops. So I think for the repairers, or I'd urge the repairers not to completely take your eye off the apprenticeships and the training, because that's still going to be the lifeblood. And I think the other thing is, which is, I made some notes, for a lot of older people, kind of late 50s, early 60s, people stay in this industry for a long, long time on the repair side of the business. The insurers, they tend to get rid of us by the time you're about 60. But in the repair side of the business, so many of the big repairers are run by father and son teams, where the father is still strong, or an older guy is still running the business and he has no son to pass it on to. There needs to be that resilience, because that is either the pension or the business that they're going to sell to kind of keep them going for the last 20, 25 years of their life. So I think gritted teeth, I think, as I say, I think the repair community, Ford and Vauxhall and BMW and Porsche and all the other car manufacturers will drop back in. They're going to have tight time. We all are. But in the area that I'm immediately going to be impacted in, my repair partners and my car partners and my salvage partners, I just don't think it's too grim. I think it's going to be tough, but they've all faced tough times in the past. So I think they're all totally up for the battle, and we'll make well, and better stuff will come out of it.
Okay. Alex, with your sort of supply chain management hat on, again, how have you, I suppose, seen the issues manifest themselves, but at the same time, how has that been managed? What does it look like from your perspective? And also, where do you think we should be focusing on currently, if you like, at this moment in time?
So the issues, I guess, are, a lot of them have been touched on. It's making sure that suppliers can be resilient and be around to service the needs through this difficult time. Again, I said earlier, thank you to those that managed to keep the doors open. That's not an easy task in this current climate. We're obviously watching closely people's financial stability and trying to make sure that we communicate. So we need to understand, we need to hear from suppliers and repairers in this case, to tell us if things are tough, and let us understand that, in a broader sense. So we're watching financial stability. Actually, we're watching the control environment. I'm accountable, like I said. Insurance is a regulated business, yeah? And we're all working on different operating models now. So people are working at home, and actually some of our suppliers, people are working at home. That changes the risk environment. So we're paying attention just now to the control environment as well. We're looking at customers, and are we actually prioritising? We're focusing on WIP, actually, within some of the repair networks, both property and motor for that case. And we're looking at that from it's a bit of a balance when it comes to WIP. So have you got work there that you're building up? Because obviously some customers just now don't want to get cars repaired. They'll book their claim and then say, you know what, I don't want to do it just now, I'm going to leave it where it is. So that can be a good thing to ease the burden as you start to, if the lockdown gets lifted and if volume doesn't rapidly rise, that's quite a nice way to ease that back in. But you don't want it building too big because you don't want a bow wave coming down that actually causes a problem for us and a problem for repairers and capacity. And we need to try and smooth the impact on customers. So we're looking at things like that. And we're doing, I think it was Andrew that touched on early on, he's spending a lot of his time right now looking at what's next. And that's clearly what we're doing as a business. We're sort of looking at this and saying, you know, so will the industry come back? Yeah, it will come back. Will it be the same? I doubt it. Parts of it, well, it's probably a sum and sum. Parts of it will be exactly the same, I suspect. But I do think we're trying to scenario plan. So what are the different sort of lockdown easing up? What could that look like? Both in the short term and in the longer term. You know, that would we see a double dip? Is that a risk? How do we manage people's and help people to manage through cash flow problems? If you've got repairers who are starting to get work back in and all of a sudden there's any kind of second interruption, let's call it, or people just vote with their feet on the basis that they're seeing, I don't know, they're seeing infection rates go up and therefore they travel less. So how do we manage people through that? And how do we support that? And also, what kind of businesses are we going to be? Because a lot of people's travel, to touch on again, Andrew or Andy touched on it earlier, you know, we've got it as, we're all, insurers tend to be big, traditional, office-based businesses. And all of a sudden we've learned in little time at all that actually you can work very effectively with lots of your infrastructure spread all over the place. And all of a sudden, does that mean that people are going to start revisiting their operating model? And if they do start to revisit their operating model, then actually, so if we start to flex, how does the industry flex with that? Because that could reduce driving. I take Andrew's point earlier, but it could be an impact. It could reduce frequency on the roads. So will volumes go back to the days they were before? Who knows? You know, but how do we flex for that? And how do we make sure that we are supporting, that we're communicating, that we're letting people see what we believe is coming? So we're planning just now and planning with our partners to say, look, how do we all win coming out the back of this? Mm-hmm. And also we're looking at what lessons can we learn. Contingency planning, you know, we've learned a lot about one of the really upsides of this scenario, if there is, just to focus on a positive, one of the real upsides is we've had a real chance to use your contingency plans in the earnest for the first time in a long time. Really think hard about how you're going to function. How do you keep your people safe? How do you service your customers? How do you keep your suppliers going? And that's been an excellent opportunity. So we should be able to take a lot of lessons out the back of that. So we're planning around that as well. Does that answer the question? Sorry, it was quite a long question, so I've wavered.
It's a great answer. Thank you very much indeed. And again, I would like to really focus on, and it's a question that I kind of, you know, receive, and one we've talked about on here previously. But you mentioned it yourself, Alex, that, you know, you're sort of scenario planning and looking at different scenarios coming from this. So, you know, are we on the cusp of a complete innovation of the industry, or is that kind of, you know, way beyond the realms, and at the moment it's a case of just battening down the hatches and emerging from this as we currently are in terms of relationships, in terms of supply chains? Or, you know, is this the opportunity to hit that kind of button and say, well, we'll come out of this as something different? Now, I know, Andrew, you've got a kind of take on this in terms of certainly thoughts around the insurance world.
Yeah, we spoke about it this morning, didn't we? I sense that a lot of those insurers that are sitting there now, and this points to a question that was asked during this chat, you know, are insurers under pressure to change their behaviours? And one of those near-term opportunities for that change might be rebating premium to customers in recognition of the fact that they're not driving, or most likely they're not driving. And we've seen that in the US with big insurers like Progressive and Geico giving rebates back, relatively token sums, $20, but every little helps. I think UK insurers are under pressure to do something similar. The sad thing is it is under pressure, and I think the goodwill that it would generate will be diminished if they're having to respond and bow to that pressure. But we could all do with an extra bit of cash in our pocket, so we'll take it gladly. I think what they're also probably sitting there looking at is, are our products that we sell now right for the future? Are they right for now, and are they right for the future? You know, the way that the insurance industry works and distributes motor insurance, the shape and size of it hasn't really changed a great deal over the last 100 years. Pockets of change where usage-based insurance has become prevalent in young drivers in particular, where the economics support the model that requires an implementation of technology. But I think I may have made the point already, how many insurers are out there wishing that they were better connected to their customers, could have a better view on how behaviors are changing. You know, are people driving less? To what extent? What are the patterns we see? Are there regional patterns? The only evidence they have is ultimately in the manifestation of claims rate that comes through, and we know that that's diminished significantly. But being able to understand the customer's needs in real time and shape a proposition, shape an insurance product around that, I think is on the cusp of maybe entering the mainstream, something that's been talked about for a long time, but I think it's on the cusp of entering the mainstream. And with that will come access to a whole lot more data. And a lot of that data will be incredibly useful in the claims process, in improving the claims experience for a customer, because it will mean that claims will be identified more quickly. So collision detection technology, the ability to understand what the circumstances of a claim are in reality, as opposed to, you know, sketchy third-party accounts of what happened versus the insured's own account. With the presence of that data, the ability to make better decisions on claims settlement more quickly, I think that's got to be a huge benefit to the industry and also to insurers and to the insured. You know, being able to process a claim, reduce the shelf life of it, will benefit everybody. It will enable claims and repairs to be channeled more appropriately within minutes of the collision having taken place, so that claims are routed and repairs are routed to the right channels. But all of this is ultimately a question of economics. The connectivity platform that would power this has to make sense, not just at young driver 1,200-1,300 quid premiums, but 400 or 500 quid premiums. And that's the conundrum that businesses like ours are trying to help insurers solve. Just as an aside, I think it'll be interesting to see what happens with claims longer term, because as people come under the terrible economic pressure that they're bound to, you know, everyone's predicting a huge economic depression here, more likely the longer that this lockdown goes on. I wonder how many people will now choose to go down an unreported route where they don't report a claim, particularly if there's no third party involved, and start to then try and avoid having to pay out their, you know, to run the risk of having their premiums inflated the next year and having to pay out their deductibles. I wonder whether or not the sort of incurred but not reported rates might start to increase. And of course, without the benefit of technology in place to tell you whether an accident has or hasn't happened or what the circumstances were, it'll be an impossible thing to count. So yeah, I think technology might be, or the introduction of claims-related technology might accelerate as a consequence of where we find ourselves at the minute.
Great stuff. Thank you, Andrew. Andy, come back to you. In terms of kind of innovation, Andrew's just spoken about technology itself and the role that could play. Hinted at perhaps an increase in repairs not going via insurance, so retail work, if you like. But can you see a wholesale change of how the industry works, how the market dynamic coming out of this, or is it just too much of an ask at this stage, kind of thing?
I think in, you know, unprecedented circumstances, we'll immediately kind of think differently. I mean, this is now, you know, third week plus into the lockdown, and whilst it was a real shock to start with, you know, I think the human body and psyche can only stand shock for so long, and you start adapting, being, you know, cooped up in a little house or a big house. You still, you know, they always say you know, a suite at the Ritz is a prison cell if you don't have the key to get out. So it's, you can kind of feel confined, and I think your psyche works for that. Wholesale change, I definitely think there will be change, but I think there will be a clamour to get back to normal. I mean, normal wasn't awful. It was, you know, we've sustained you know, a tough industry for a long time. Perhaps, you know, repairers can feel more so than the insurers. But if you look at the insurer dynamic now, as I say, I've made a call to a few supply chain partners over the last couple of days when I knew I was speaking on here, just to kind of get their opinion and their feedback. And from their point of view, it was really, well, we'd like to get back to sort of some norm, but we'd like the collaboration to stay. We've been speaking to insurers because we want them to know that we're open for business. What else can we do for them? I mean, a kind of typical, I'd say, supply chain approach. I've had it with the credit hire, the car companies, with some of the lawyers. I think the more connected ones, the more innovative ones, not the ones just kind of clamoring for claims volume. So the ones who are long-term players, investors in the industry, I think they'll learn from this. And the insurance industry, for me, had always been, you know, particularly the sort of size of the insurance that I work for and the one that Alex works for. It's difficult to push change because it's not you making a decision. You speak to board members, a lot of people who've got to kind of, you know, sign it off. So the innovation has really been delivered for me, for the supply chain, and that means the repairers and the daily rental companies and the salvage companies, be that IT, new processes, new equipment, you know, whatever. We've kind of relied on them a little bit. I don't think that's going to change. They are kind of more nimble, I think, and able to respond to that change, but also kind of spare a thought for the insurers. You know, when I've had these kind of comments that we take £1,000 off you on the 1st of January to insure your BMW, and now none of you are driving your BMWs. You know, we're sitting on lots of cash. I don't want to steal Alex thunder, but I'm sure Aviva insure a lot of travel companies as well, be they under white label for things like British Airways and Virgin and EasyJet and Ryanair, as well as the Four Seasons and the Hilton. And there's an awful lot of people queuing up on the underwriting insurers' phones at the moment to get paid out. So they may be drawing the cash in with one hand, but they're paying out with another. So I couldn't comment on what the balance is, unfortunately. If it's net, I doubt it. There seems to be an awful lot of money going out on cancelled flights and what have you, and credit cards at the moment. So I'd like to think there'll be a collaborative change, Mark, but I like to think that is driven by the relationships anyway, that you both kind of need each other. And going forward, you know, if it returns to flatline, but if there's a spike, we're going to need that supply chain even more. So it would be very naive of insurers and brokers and the providing type companies not to invest and keep collaborating with the downstream suppliers, because, as I say, it's not going away. The market's not changed. It's just taking a deep breath, and it's still. So I'd like to think that all of the good intentions, like looking out for your neighbour, picking up someone else's shopping, will stay. I think it will. I think it will fizzle out because that's human nature, unfortunately. But initially, I've seen some amazing collaborations from some of the bigger players in the market, and some of the larger insurers. I mean, have literally sort of taken my breath away in terms of their proactive calls to insurers to say, you know, if the work started, we'll pay for it. If you bought the parts, we'll pay for it. We'll do it quickly. Some of the big daily rental companies have said, we'll extend the car, we won't charge. I mean, the offer of, you know, 50% reduction in car hire for essential services, that's the sort of thing that kind of makes you feel a little bit warm inside. And if a lot of that stays going forward, even if it's for, you know, until, you know, we've got a vaccine and we don't have to worry, you know, COVID is like the common cold. It's a mild inconvenience. If you got it, you get a jab and it goes away. Until those step changes are in, Mark, as I say, I like to think there'll be some arms around shoulders across from, you know, supply chain to insurers and insurers particularly. And I think it started. I just don't think, you know, as Andrew said, everyone's kind of bought into it yet and giving payment holidays on insurance or extending it. I mean, as insurers, we always go on about how difficult it is to acquire a customer, to pay an aggregator fee, to advertise on the television, and then to keep them is even harder because all they do is just go and shop around every time the renewal comes up. So if we can do, you know, we can use our kind of customer service heads to say, well, we're not going to give any money back. You've not driven for 2 months, so January and February next year are free of charge. They're on us, providing you stay with us for another year. There'll be a lock-in, but if it's, say, you know, people are going to need some financial help in the next sort of, you know, 12 to 24 months, and as I say, I think, you know, insurers can play the part.
Yeah, and you've referenced the collaboration there. Now, the MBRA, Chris Weeks has joined us on here every week, actually, up until now. He's having a rest this week, but they produced a great paper yesterday, I think it was, where they were talking about what they've heard and the research they've done in terms of part discount, COVID-19 charges for body shops, labour rate increases in a couple of cases, speed of payment. So all these positive things that are going on out there. It is happening, and it's great to see. And Alec, is this almost a case of will this kind of bring good relationships, make them even better? Will it really highlight those kind of partnerships where you have got great collaboration, as Andy said, and you're really working with, the right people? Is that something that will kind of stem from this?
I'd like to think so. For a long time, I mean, let me be really blunt about it. For a long time, I think the insurer and the repair industry have got on, but it's not always been an easy road. And I think if you take a stand back and look at what the industry in its widest sense and all parties involved in it have done in the last 2 to 3 weeks, in unprecedented times, in volumes going off a cliff, with businesses facing massive financial hardship, I don't think, we've managed to support essential services, we've managed not to derail issues for customers. It's a phenomenal outcome in 2 to 3 weeks of absolute turmoil. And therefore, if that's probably as an industry as at our best. And therefore, we've got to be able to take the best parts of that and say, and also not be afraid of looking at the bits that weren't so good. Yeah. So there's the best parts. There's the bits about, where we did actually get in touch with people and we formed lobbying groups to try and, release parts or whatever the case may be across the market. And all the other suppliers who have said, it's a bit touch and go for me, but I'm going to keep my doors open. As a repairer, I'm going to keep my doors open because I can do the right thing by those customers that really, really need it. Really fantastic. Take all of that, but then also look at how do we plan better for the next one of these? How do we communicate better? How do we get to a point where we trust one another to talk about really the commercials that sit underneath some of the ways that we work, and actually trust the intent in that from both parties? Both from an insurer's perspective and the repairer's perspective. I do think this has been a fantastic test of the industry, and I think we would be foolish, whatever the future looks like, whatever volume looks like, whatever. You talked about technology. Will technology play a part? Undoubtedly. But you've got technology that can play a part in the way we work together as businesses. You've got technology that can work for the customer. Technology, we are going to continue to evolve as a society, and the demand, it all for me stems back to what do customers want? What does that customer demand shaped like? So if we could start to work together as an organisation, as an industry, to genuinely look at what is that customer demand? How do we build a service proposition round about what the customer actually wants, and how do we work together so that, again, to use a probably overused phrase, to make sure that everybody in the game wins. There's got to be a solution that works for that. There's got to be a solution that delivers a fantastic customer service that actually means people who are involved in delivering that service are making the right margins, and that actually keeps the product, the core product, whatever shape it's in, affordable for the public and profitable for the insurer. There has to be a sweet spot in there. And maybe one of the things we'll get out the back of this is an opportunity to work a bit closer on looking at that.
Yeah, that's great. And that is such a good positive message that's out there. And I think, increasingly, as you say, we're kind of, we're in crisis mode for the first couple of weeks when this was happening, and it was, everyone was very edgy about, where we were going to end up. We're now starting to see, kind of the more, dare I say it again, use the term, but the positive aspects to this of how people are working together and potentially where we could end up with all of this. And Andrew, big word used there, trust. Obviously, from where you sit in terms of telematics propositions, I imagine that kind of just, that ingrains trust in people in the first instance. It's data and it's proof.
Yeah, well, I think it's probably a case of shifting sands there, because I think inherently most people are very wary of that technology, or have been historically very wary of that technology. They've probably viewed it as a bit of a one-way bet in the favour of the insurer. Certainly when we launched Carrot, and Richard, who's obviously behind Ticker now, was behind Ingenie, there were a lot of headlines in the press that were talking about the spy in your car. You know, insurers are saying that they could reduce your premium. The thing they didn't say was, of course, that your premium could go up, and the assumption was by most that their premium would go up. I think as time has gone on, I think more and more people are accepting of telematics insurance. It's become more ubiquitous in a certain part of the market, that young driver market, and therefore parents are familiar with it. What we might see is a bit of a tipping point, where, you know, the argument stands up very strongly for young drivers in that they're paying very high premiums. They're paying an awful lot more if they don't have a telematics insurance product, and that's if they're able to be offered one at all that doesn't require the installation of a black box or some form of hardware. And the economics work because the cost of the premium, the size of the premium can support the cost of the technology implementation, and it makes sense. The value exchange is there. But for your average guy, woman paying, you know, 400 or 500 quid's worth of premium a year, are they prepared historically to, you know, to exchange their driving data, their privacy for maybe a 10 or 20% reduction on the annual premium? I think a few more might now, because people will be looking at their entire household expenditure in the face of what we're already in and what we're heading into in terms of this economic landscape that we see looming in front of us. People might just be prepared to adopt something which is maybe, you know, something historically they would have rejected, but now if it can get their insurance cost down by 15-20%, I suspect a lot more will accept it. I think there's a requirement for the industry and the insurers that are already using this technology to show that it's used for good. And I'll give you an example of that in our business in the past fortnight. You know, like most telematics insurance policies, it's a declared mileage product. And of course, with the presence of the technology, you can see how many miles they're traveling. So one of the things that I instigated in our business in Carrot was to say, look, let's identify from their occupation who all of our critical and key workers are that we insure. Let's look at the ones that are running out of miles or have got maybe 1,500 miles left of their allowance. Don't ask them, just go and give them another 2,000 miles for free. We recognize that they're the people that are having to use their cars, that may be doing increased shift work, traveling further afield to work, they may be volunteering in their cars. Go and give them it. Don't wait to be forced into a situation. That's the way you have to act. For me, using demonstrations of how that data is used for consumer benefit is what will tip this into the mainstream. That, and of course, making the economics work of the insurance cost equation, how it all sits in their premium stack. So for me, for all the artificial intelligence in the world that we have within what we do, or how we might start to see some of that coming into the world of claims, you still need to overlay some emotional intelligence on top of that artificial intelligence. You've still got to act in the right way at the right time, and do it in a way that people will appreciate. You know, don't be forced by a regulator into a situation, because then it carries zero goodwill. Do the right thing. And I think what we've seen, not just in insurance, but across a lot of businesses at the minute, there are those that have done the right thing spontaneously and they'll come out of this incredibly well. And there are those that are going about it entirely the wrong way, and asking for handouts, you know, from the government when realistically they've got no grounds to be doing that. So for me, I think that you build trust by earning trust, and the industry has to do that first. You have to earn it, and the only way you can do that is by turning, you know, good thought into good deed, and we've tried to do that wherever we can over the past few weeks.
And that's a great point on the emotional intelligence. It's you know, and that's something we kind of sit here and we talk about market dynamics and potential implications, financial and on business, but emotional intelligence in terms of the people that we work with and the industry we're involved in, you know, that is now something that I think, you know, dare I say it, is now coming to the fore in everyone's minds. How are our people? This industry doesn't function without people. And I think, you know, over the next days, weeks, I think we'll see an increased trend where we'll be turning our attention on those who, you know, are perhaps been furloughed or whatever it is. But, you know, we need to take care of those people as an industry as we reintroduce them back into the workplace. I think that's absolutely essential. I appreciate we're very nearly out of time. We've got a couple of questions come through. We'll just kind of pick our way through those. I think a lot of them we've covered off. Some of them we'll take away and cover off for you. Just a quick, Andy, in fact, all of you, just very quickly in summary. Andy, focus right now, if you were a body shop, where would you be looking? Where would your intentions be?
I think I'd be, whilst I'm not repairing cars, Mark, I think I would be keeping my relationships alive, thinking about other things that you can do with, listen, I mean, if you want to be, super philanthropic and there was something you could do in your body shop to make respirators, then you should be doing that, or making, sort of PPE clothing, that sort of thing. But in terms of business and sustainability and looking forward, hopefully in the next 4, 8, 12 weeks outside of lockdown, is speaking to your work providers, asking them what they need. You doing all you can for them, building the partnerships, keeping that live, taking this opportunity to to know that you can kind of come back more nimble, cost base, anything that you've not had time to do the last couple of years, even if it's like sort of tidy your office and putting a new filing system, anything that you can do to drive a bit more efficiency, to help the whole kind of practice of cash flow and income and work provision and all your kind of processes and IT, use it with the right time of year for us, spring clean. Just try and think beyond this kind of god awful time, and it will end, it will pass. But make sure that your relationships are strong in the supply chain as well, that your staff are okay. Just be bring as much human and as much of you as you can to the industry and to your company. Thank you.
Great stuff. Alex, same to you.
Same question.
Yep.
Yeah, I guess, listen, everyone who runs their own business is going to be looking after their own commercial position, and that would be first and foremost on their mind. I guess their people, how do they look after the people, both whether they're actually in work, whether they're furloughed, whether they've got to bring them back, and whether they've got to be flexible. So how do they turn their attention to, how do they flex their business model? Because the future is uncertain. It will come back. I'm sure it will get back to something that resembles some sort of normality. It may look a bit different. So I would be saying that use the time you've got, have a look at the future, have a look at how you flex your model. How do you create a business that can shape to the demand that comes in if that demand is different? And talk to your work providers and your other partners. Talk to them as often as you can. Find out as much as you can about what planning they're doing and what they anticipate to be happening. And that might help you shape your business and not be quite so surprised by what's going to be coming down the pipe.
Great stuff. Andrew, very, very quickly from you. Again, where would you kind of be looking right now if you're an SME involved in this industry?
If I'm an SME, I think I don't look to the major global incumbents for guidance on what I should be doing. I look to collaborate. I look within my own industry peer group for opportunity to collaborate. There's arguably strength in depth, whilst the instinct might be that it's every man for themselves and dog eat dog. I think there is an opportunity now for people to collaborate. I think there's a willingness for people to consider new ways of working, new partnerships. We're certainly seeing that through our business. And think differently. Use the opportunity to think differently about your business and to think less about competition, but how you as an industry work together to improve things, for yourselves, but also for the people that are the lifeblood of your business, the consumer, because there's so much turmoil out there. People are open to new ways of looking at things and new ways of doing things. So that would be my counsel if I'm in any place to give it.
Right. We're going to wrap up there. I know some of you are popping off to another meeting now. So thank you very much indeed for your time. Everybody, thank you very much for joining us. Andy, Alex and Andrew, thank you very much indeed. And catch up with everybody at the same time next week. Take care, guys. See you.
Thank you.
Thank you. Bye-bye.
Cheers.